Janine Grainger, how are you?
Great, Darcy. Good to see you again. Nice to be here on the podcast, and been a while.
It has been a while. Episode 319 is when we caught up last. We were talking about regulation by enforcement was the main theme, and that because it was around February, and that was when...
And so much has changed since then.
So much has evolved.
More enforcement.
Yeah, more enforcement, less regulation, but I guess we're starting to see the shadow of the regulation that could come. I guess that's one way of looking at it, right? Because we're starting to see the true intentions of the people behind this to make us safe and to hopefully provide some clarity for all the actors that are moving around. So yeah, just before we get into that discussion, you had a pretty amazing couple of weeks. Why don't you tell us about the High Tech Awards and what happened there and how you feel about that?
It was incredible. It's been a huge last fortnight, actually. Easy Crypto was named in the Callahan Top 100. They sort of put out the first 16 companies for that, and 3 of those were Web3 companies, which I think is a really interesting, legitimization of the industry and sort of an interesting proof point for where value is being created in the economy and sort of the future for New Zealand exports. So that was very exciting. And then as well as the Callahan 100, yes, the High Tech Awards. Don't make me say it, Darcy.
Come on, say it, Janine. Say it. Come on, own it.
Inspiring Individual to IBM High Tech Inspiring Individual 2023, right here.
Awesome.
Yeah, it's hard as a Kiwi to be taking
ownership
of your own achievements. Yeah.
So, because I greeted you this morning as the queen of crypto, but you rightly corrected me. You're the queen of high tech.
Queen of high tech. Although I have to submit, I don't really know what the difference is between high tech and regular tech. That's confusing for me. Maybe we just need to rebrand all to tech, but regardless, high tech inspiration. And also there was on Friday last, Near Foundation put out their Women in Web3 award, which is a global sort of recognition of women who are making an impact in Web3. And I was proud to be sort of one of the 10 in that as well. So it's been a huge week or two, and yeah, quite overwhelming.
Yeah. Does everybody in the team kind of treat you differently and they bow down? And
They already did.
They already did. That's good.
No, so business as usual, but it's one of the things that is really nice for this is particularly so that High Tech Award, because that's quite high profile here in New Zealand, is I'm really hoping that will help us as a business again with that legitimacy, that mainstreaming. I had a supplier come up to me at those awards. Well, sorry, I should rephrase, a potential supplier, someone who wanted to take us on as a client but was having trouble getting their board across the line to accept a crypto business as a client.
Right.
And they came up to me after that win going, this is great. I just already sent it to the chair of the board. We're hopeful that, so as a crypto business, we still have that discrimination and that challenge and find it difficult for people to do business with us. So that award will hopefully help, just smooth that path just a little bit. And maybe even one day crypto businesses could get bank accounts, who knows?
Legit. So if we go back to that word legitimate, and one of the things we were saying before was the whole issue of scams, and that seems to be really picking up steam at the moment.
Yeah, and not just in the crypto industry, something that I've really noticed, and if anyone's been reading the media, there's a lot of articles at the moment. I think there was one particularly very big scam that's been hitting New Zealand over the last little while of, people who happen to have some cash in the bank, maybe they've sold a house, searching online for the best term deposit rate. And unfortunately, the website that, comes up top in the Google searches has been a scam site. People put in their details, they get a phone call from someone who sounds very legitimate, very trustworthy, and they end up, sending all their money off overseas to a scam and never seeing it again. And this has hit, the last figures I saw was something like $40 million of New Zealanders' money lost to this one scam, which is huge. And one thing that I really would like to see in the future, and I have a lot of hope around crypto being able to help with this, is better transparency and better validation and checks and, just those red flags being surfaced to people. Like these people would not have, they weren't in a confidence scam or a romance scam. They weren't wanting to lose their money. They weren't trying to gamble it. They thought they were investing in something safe. And for, with New Zealand's banking system, which has made great strides with recent moves to 7-day banking, like amazing. But there is still a lot of challenges with our legacy banking system. Things like when I send money, say I send $100,000, I think I'm investing in a term deposit. I have no way to know who the beneficiary of those funds are, like who I am actually sending my money to. And that's pretty scary when you think about it. You're just sending it off. And if I've been told I'm sending it to a term deposit, but I'm actually sending it to some random dude in Futadadu, like I have no way to check that. And so with crypto, And with, increasing digitization of finance, I think we have a huge opportunity to build a more transparent, more robust, more scam-proof financial system that, helps people not lose their money to things that could have been easily avoided if we had better information.
Yeah. And just to make that really abundantly clear how that could work, like on the blockchain, for example, if that was a conduit that banks actually went through to the other side, then we could ensure that transparency, right? Because we could see the address on the other side that it was being transmitted to.
Yeah, and even and we'll probably talk about this when we chat about CBDCs, but, transparency is one amazing thing of blockchain, but you also want privacy, and I think it's incredibly important. But there are entities that don't need privacy. Corporates, businesses don't need privacy on the blockchain, or at least, not in everything. So if I'm sending money to a crypto address, like I use blockchain analytic tools and, we look at our customer transactions. And if someone says to me that they're sending to, they might say they're sending to Binance, and I can look on the blockchain and see if that's true. And if it's not, I can let them know, hey, it's actually not a Binance address you're sending to. Did you know you're sending to XYZ exchange, maybe an unregistered peer-to-peer exchange in Africa, for example? This happens a lot. And sort of, as an individual, I don't necessarily want people to have visibility of my transactions or my account. But as a company, absolutely. If someone sends money to an Easy Crypto address, they should absolutely have visibility that that is Easy Crypto, because that builds trust and transparency. It can help prevent scams where people are persuaded to send money to, a scam when they send it to a legitimate company.
Sure, and no disrespect to the Nigerian princes out there that are legit.
Yeah, I'm sure there's a few, but yeah.
Yeah, sure. There seems to be a lot messaging me. You said, though, around the privacy, it doesn't necessarily need to be prioritized for corporations, let's say government entities as well.
Yeah.
But individuals, yes. And is that something that is quite easy to implement?
Absolutely. And this is one of the things that I love about our industry, right? It's like whenever you come up against a problem, there's so many smart minds working on solving that. And one of the things that I think is really worth watching at the moment is zero knowledge proofs and how we implement those into blockchain. So
I've heard about this.
For anyone who doesn't know, a simple way to explain a zero knowledge proof is to use the example of buying alcohol at the supermarket. At the moment, when I go to the supermarket and on the off chance that I get ID'd, which sadly doesn't happen often enough these days, I have to hand over my driver's license, which gives them my full name, my date of birth. Some people have their address on there. That is a lot of data for me to give to an individual. Now, this is just I flash it up at them. They look at it. They're not storing that data. But for an online transaction, that data could be stored. I don't know where it's been sent. That's a lot of my private information. Whereas really all that supermarket needs to know is this individual over 18? They don't need any other proof points about me, just over 18, yes or no. So zero knowledge proof is a blockchain technology that you can use, which surfaces the outcome, yes or no to over 18, without surfacing any of the information.
Sure.
So there's a lot of cool ways that this can be used with things like, say I want to prove that I haven't sent or received money from sanctioned countries. I can prove that without showing who I'm sending to or from. There's a lot of ways that personal privacy can be protected while still ensuring things like anti-money laundering controls and, digital identities that comes on. These things can be utilized and while still enabling and protecting privacy.
And you're seeing a lot of technology make everything cheaper, easier, faster everywhere. But it seems to be, as soon as we get into the financial system, especially globally, you can see that it's butting up against traditional structures and ways of doing things which are slow, cumbersome, trusted, yes, but it's missing all those other pieces, right? And I just wonder how this will impact things when we can actually verify who it is that we're sending money to before we actually send it. Mm-hmm. And we have supreme confidence in that, not because of the authority that's traditionally put themselves in between that transaction, but because of the technology.
Yeah. And I think this is a real win for banks as well, because at the moment they play that role of the authority that, vets your transactions. And I can see this is hugely complicated for banks. There is, if you look at the Banking Ombudsman's website, there is every week cases going up where people are saying, my bank allowed me to send money to something that was a scam. They should have stopped me. And this is challenging for banks because you also have customers saying, hey, it's my money. You need to allow me to do what I want with my own money. And, I feel for the banks. We're all in a hard place, but I believe that we should be able to give complete financial sovereignty to people. It is your money. You do what you want with it and allow people to do that whilst also having the protections that, stop people from getting caught in scams.
So we're starting to look at the banks sometimes now as more of an insurance provider with our transactions, which potentially wasn't their historical role, right?
No, absolutely. And it is a really complicated one. And these recent, term deposit scams, one of the articles I read on it, the person had put on their banking reference, they said, they paid money to a bank account. They said it was for an HSBC term deposit. They didn't know who they were paying to. And, I can see their expectation that the bank saw the purpose of my transaction. I said I was making a term deposit. They should have seen that I was paying into an individual person's account, which was clearly not what the purpose I said it was. So there's definitely complexities here. And I think, for me, the key comes down to we've got these legacy systems that weren't built for this. They're not right-sized or they don't have the right technology. But, we're working in this amazing new financial paradigm and this new infrastructure that is really limitless in what we can do with it. If we can think it, if we can code it, we can do it. And so I think, we got to leave banks in the dust and have a much better way of doing finance over the next few years.
Yeah, which is a fascinating thing for you to say, because I look at this sometimes from a different angle where I'm dealing with the banks all the time, and it doesn't feel necessarily like they're moving at full speed sometimes, or even to the fullest of their capability in terms of rolling out new features. It's very, very slow, and they're maintaining, but they're not necessarily upgrading, which makes me wonder, do they see the writing on the wall?
I wonder if they do. I just saw one of the big banks recently, I think 2 weeks ago, fired their entire innovation team, which to me, that is a very bold statement. This is a bank that's had, record profits, as we say pretty much every year about banks. They are, facing a lot of disruption around them. Neobanks come in, and I saw Revolut's just launched coming in. You've got a lot of disruption in the industry. And then it almost feels like the banks just throwing their hands up and say, you know what, we'll just, keep riding the wave while it's good. And, where are they going to go in the future? I'm not sure. But there's also, there's a lot of complexity coming into the banks as well from things like open banking. So as we referred to earlier, banks have now moved to 7-day payments, which it's kind of bizarre that it's taken us this long to get there, right? And I understand why. I used to work in a bank. I know there's a lot of technical complexities and, legacy systems to work around. But life is 24/7, and yet we've had this, banking hours for money for so long. Open banking is going to, and open data rights will have a big challenge on that. But there's still so much just blockages in the legacy system. Like one hilarious example that I came across the other week, I have someone come and mow my lawns, and over summer they mow them every fortnight. Gets around to winter, and I'm like, hey, can we extend that out a bit? They're like, yep, I'll come every 3 weeks. I was like, great, I'll change my automatic payment. I cannot make an automatic payment go 3 weekly. Try this in your bank app. There's about 8 options. You can go daily, weekly, fortnightly, monthly, annually. That's about the limit. A few others maybe. There isn't one, right?
No, there isn't one. I was just thinking, well, you would just set up 2 offset bank accounts doing it.
Or what I could do is I could do a fortnightly payment for 66% of the cost and ask my lawnmower to work it out on their side. That sounds painful for everybody, but yeah.
But you're right. So let's go to the US. We have the SEC, the Securities and Exchange Commission. Earlier this year, Gary Gensler, chair of the SEC.
Crypto's favorite person.
Oh, yeah. And I want to come back to him later on. He very clearly, now there's a lot of speculation. Just go on crypto Twitter and you fill your boots with all sorts of crypto conspiracy theories. And I haven't fact-checked some of what I've been reading, so just be really careful with what I'm saying. Janine.
Is your source ChatGPT?
Of course. With the web-enabled extension that gives me website references that don't exist. But yeah, Chair Gary Gensler has had a bee in his bonnet, gone after Binance, he's gone after Coinbase, and first up, we talked about this a little while ago with Paul Quickenden from Easy Crypto as well on the show. He's a good dude, yeah, totally. And he was up with the plate in terms of what things are going on around this space. So we've kind of covered a lot of that already. What I wanted to focus on is, and just for revision, maybe just highlight the differences firstly with Coinbase and Binance in terms of what's going on there.
What we've seen coming out from Binance, and there's been a lot of very interesting things coming out in some of the internal documents and stuff that they've had, which does make it seem there's a bit more of a willful flouting of regulation there potentially. Coinbase though is a really interesting one, and I have a lot of empathy for Coinbase on this, in that they've been very proactive, and you see Brian Armstrong on Twitter a lot over the last couple of years, really trying to engage with the SEC. Just feels like he's batting his head against a brick wall, trying to get clarity on what is a security, what is a financial product, what is regulated, how does the regulation work, and just getting radio silence really, or stonewalled. And then now the SEC coming out with, the classic old regulation by enforcement. It'll be really interesting to see how these ones play out. But two of the things that I've noticed on a sort of broader, more macro level on this is one, how much the entire crypto world cares about the US. Like, we don't have these debates around regulation in Singapore and Dubai and the UK, even though those are actually really quite impactful financial centers for crypto. It's like the US just ran the public consciousness on crypto Twitter. But the second thing is that it feels like this is starting to showcase or create some schisms inside the US government. Like, you've got Gary Gensler in the SEC, and then you've got sort of senators and other government agencies like calling to reduce the impact of his role, or what the SEC can do, and trying to look at perhaps passing more crypto-friendly regulations. So that aspect is really interesting to watch. That there's definitely not one single view from the government there, which again, that makes it incredibly complex for businesses trying to do business in the US when you've got a government that can't speak with one voice. Which possibly actually slight segue to one of my other favorite topics is New Zealand becoming more of a powerhouse and a home for digital companies and for, Web3 businesses. Is that New Zealand has this amazing competitive advantage in that we have small government, single layer of government, and it's actually really quite straightforward normally to get a view from government and to, be able to know that you're operating within the bounds of regulation. Like, we could do more in there. I'd love to see New Zealand have a regulatory sandbox and environment for companies like mine and overseas companies coming in to be able to test and learn without fear of enforcement. Yeah. But for the most part, New Zealand's really good, and we could really push, Phil from Aura was talking about this on LinkedIn the other day around New Zealand's competitive advantage in the digital economy, and like getting government and getting more actors behind that to really push that and grow the pie for everyone here.
You think there'll be potentially a crypto hub in New Zealand?
I'd love to see that. And like, there are other companies vying for this, like Dubai has been, but they are also, there's some other challenges with, particularly what's been happening in Russia and where money flows have been going off the back of that I think makes Dubai a less attractive space for our industry, particularly for those of us who want to be seen as very legitimate players. UK is looking at it as well. Australia's been making some moves in this space, but they're a bit divided as well. So I do think there's a big opportunity for New Zealand, and like the timing is right.
We're the test case country, right?
Exactly.
When it comes to money. Why not?
Oh, you don't pull out the FBOS example again. Like,
I'm not going there. I've already.
It's like we did this innovative thing like 3 decades ago.
So BlackRock, they've come out recently, 571 successful applications to 1 decline in terms of getting their exchange traded funds approved, and they've put an application in to get a Bitcoin spot ETF approved. Canada has that already, and there's other futures-based ETFs. We've talked about that previously on the show, so we won't go there again. But what I find interesting with this application is that Coinbase, the one that's being attacked by the SEC, is going to be potentially the custodian, the one who holds the Bitcoin for BlackRock in this ETF. That's my understanding.
Yeah, and like I think that probably just speaks to the legitimacy of Coinbase as a player, right? I mean, BlackRock, although didn't BlackRock invest in FTX?
Well, yeah, I guess that.
Yeah, I was going to say BlackRock are stupid, then
they make mistakes.
Yes. They make mistakes, but they would have done a lot of due diligence on this. And Coinbase is a legitimate player. They have, worked hard to try to be on the right side of the law. I think what the SEC is going after them at the moment on is about their earn product, which, this would sit separately from. There is also that lack of clarity as to what is and isn't a security from a token perspective, but I don't think there's been a single list that Bitcoin has been on that. So BlackRock are probably in a relatively safe space with this one. Yeah. But it is also interesting, that ETF going through, and it feels like, floodgates opening with
everybody else trying to do it.
Exactly. Like the list just, it's a mile long.
Yeah.
And that's awesome, right? It's great to have financial products that involve cryptocurrency that make it more accessible to other people. There's also things like tax benefits. If you're in New Zealand, you can have a different tax structure for Bitcoin if you're investing through a spot ETF. That's not capital gains. It's FIF or whatever other tax rules are applying straight into your territory.
No. This is good. It's good. Keep going.
So it is interesting that it opens it up to more people. It makes it more accessible because you don't have to have your own wallet. You can go through a broker or a fund manager that you're used to, and you can have different tax treatments, which is fascinating.
Oh, it's awesome. And I think with most people that have viewed Bitcoin in particular as just another ingredient to include in their portfolio, one of the issues that everyday investors or holders of Bitcoin have,
which tag everyday investor?
Thank you very much to sell that. That's good. would be the tax implications.
Yeah.
Because when you're rebalancing your portfolio, like this year especially, you might have had just a 5% allocation towards Bitcoin. Well, that's probably closer to 20% now. I'm just guessing.
Bitcoin.
So you might want to be selling that and rebalancing, right? But as soon as you do that, you create taxable events. But
and you're crystallizing those, losses, which for many people will be a loss, right? Depending when you bought in.
Exactly, yeah. So with these ETF products, it makes it so much easier to do that. And I think maybe that's one of the reasons why in the last few weeks we've seen a bit of a run up in price, or the last couple of weeks in particular. Who knows, right? But I just find it fascinating. Another rumor I read on crypto Twitter again this morning was that Gary Gensler was resigning. Which, have you heard about that one yet?
Has this rumor been sourced on ChatGPT as well? Well, I want to read this one. Like, you can't bring these on me mid-interview.
I know.
So news this morning, I was like, I just let in and came through. Yeah. That's interesting. I mean, like, there has been a lot of very high-profile criticisms of him from other parts of government and from Senate. So potentially, but I'll believe when I see it.
Yeah, and so will I, and so should anybody, right? Like, buy the rumor, sell the news, right? Is that right? Yeah, that's the right way around. Not the other way around, like what most people do: buy high, sell low. So, but it seems like the connections between Gary Gensler, Hillary Clinton, all that side of the political spectrum seems to be in conflict with the other side of the spectrum. And that's probably what you were alluded to before, with the schisms kind of appearing, or the stress cracks appearing in the regulatory regime over there. And I just find that fascinating. All this playing out when we have global conflict going on, where clearly the US dollar is one of the weapons being used. I find that just so fascinating, and a great opportunity to learn about how the money system actually really works. But bringing it back down just to everyday people, let's now talk about central bank issued digital currencies, CBDCs. What was considered even just conspiracy theory, even saying CBDCs almost like a year ago or over a year ago, now is very much in the mainstream conversation. And I think that's good. I think we need to be talking a lot more about what this means. To start with, should we just break down what a CBDC is?
Sure thing. So for anyone who doesn't know, the money, at the moment, there's two types of money that exist in the world. There's government issued money and private money. So government issued money is the physical notes in your wallet, like your actual $20 note, your coins, but they only exist physically. If you want to hold money in your bank account or digitally, it's actually issued by a bank. So if you see that you've got $100 in your BNZ account, that's not $100 of government issued money. That is an IOU from BNZ to say that they will give you $100 if you ask them for it. So there's quite an important distinction there, that your money is not your own. Your money is actually an IOU. CBDCs are this really interesting way to bridge that divide by having a government issued and fully backed by government currency that is digital, as opposed to having to exist only in physical note form. Massive challenge here for banks if CBDCs come out, because if you could hold your money, instead of having an IOU from a bank, if you could hold money directly with the government, there's reasons a lot of people would want to do that. There's a certain level of mistrust for banks, I think, particularly for people who've been around a while and through different economic cycles. But also, as we talked about before, there isn't that innovation in the banking system. Like, payments have only just gone 7 days. You can't do a 3 weekly automatic payment. These kind of innovations, like if you had a government-issued central bank digital currency that was on a blockchain, it was programmable. Can you just imagine the speed at which innovations would happen and people would come up with cool technologies, use cases, plugins that you can put on the top of that to, program your money to do whatever you want it to. And so I think, CBDCs will open the door massively for innovation in a way that we haven't been able to.
I didn't believe that when I first heard that.
Yeah.
Which is, sorry to interrupt, Reserve Bank of New Zealand isn't capable of any innovation, is what I was thinking.
No, but they don't need to, right? They just put the digital tool out there, and fintechs, neobanks, companies like mine, we could innovate on top of it, which is super exciting.
I didn't get that initially, though.
But there is a lot of people are very concerned about CBDCs, and for good reason. And that I think there's a couple of really important characteristics that they need to have to allay those concerns. In fact, the two that I think are absolutely non-negotiable. One is that open source, so China has a central bank digital currency at the moment, but it's not blockchain based. It's digital, but it's closed ecosystem. I can't start innovating on top of it. I can't even access it.
Is that like a distributed ledger network, but within?
Yeah, so it's not distributed.
Oh, it's not distributed.
Yeah, I don't even know what the tech underneath it is, but it's electronic currency, but it's fully controlled and centralized. So ideally, we want central bank digital currencies. We'd actually want the D in that to be decentralized, just central bank decentralized currencies, ideally. so that they aren't controlled centrally and they can be innovated on top of. And the second thing that's really important, and this is something that New Zealand's RBNZ has recognised in their design principles around CBDC, is privacy. So I talk about privacy a lot. It's one of my hot topics.
Can you define what you mean by privacy in this context then? That's kind of just to be really clear, because I think sometimes with privacy, we kind of think, well, no one knows your name, or like no one knows where you live. What do you mean by privacy when it comes to CBDCs?
So I might just step back a little bit and talk about privacy on the blockchain. So a lot of people don't realize that every single transaction on, a typical blockchain is fully transparent and open and visible. And that's great because it means, like we were talking before, you can have, better insights into scams and, where you're sending money. But it's also problematic for individuals and, liken it to your bank account, right? Imagine I pop next door and buy a coffee. And if I paste that coffee from my bank account, imagine that the cafe owner can see how much I earn, who I work for, where I spend my money, what types of things I buy. Like if they could see every single financial transaction I make because they can link me as a person to that payment for a coffee, that's really problematic. You don't want that. You don't want your employer knowing everything you do with your money. You don't want the government. You don't want, you don't have to be doing something dodgy to want privacy. Like privacy should be a fundamental part of civil society that we all expect, because that's really critical to function as a society and, as democracy. So then when it comes to central bank digital currencies, this is where it starts getting really interesting, because if you have a government-issued currency that is transparent and visible and they can see where that money is moving around the economy, they can see who's using it, how it's being used, that's very useful in a lot of ways. And there's also, you can have programmatic benefit payments. When floods and stuff happen, it could be very easy for everyone in a geographic area to be dispersed money. There's a lot of good benefits there. But you also need to make sure that you have privacy around what you're doing with your money, that, the government can't sort of overreach that visibility into you as an individual citizen and what you're doing. So RBNZ, New Zealand's Reserve Bank, has recognised this as one of their design principles, is that any CBDC should be cash-like with that sort of anonymity and privacy that cash has. And I think that's a really great starting point and something that, I hope more governments around the world will build CBDCs with those two principles of, open source and enabling innovation and enabling privacy by default.
Do you think that those two things will be maintained throughout, or will they be kind of watered down at some stage?
I think it's up to us, to be honest. This is probably one of the reasons I talk about this so much, is that if everyday investors, everyday people,
let the hashtag in.
Hashtag everyday investors.
There we go.
Are pushing for this and ensuring they hold their governments to account to, bake these things in from the start, and then they'll hopefully be hard to change. Sure. But allow them to be watered down or to be not considered at the outset. And, you end up with this kind of stuff, digital payments, digital money, combined with digital identity could lead you to a totalitarian society very easily.
Should we underline that one just a little bit? Yeah.
And so it is something we should all care about and, weigh in on and make sure that, how these things get built is how we want, enabling the type of world we want to live in.
Yes. Okay. Because I guess it won't take much of a crisis to come around, which would necessitate the lowering of that or the watering down of those principles for a season, which may or may not reverse, right?
And this is another one of the cool things about blockchain, right? It's you've seen a lot of examples of governments, watering down some rights for a season, and they do it through legislation, but then that legislation needs to be repealed. It doesn't, automatically time out. Whereas with smart contracts, with code, with blockchain, you could be like, this thing only exists for 3 months, 6 months, whatever. And so you can actually force that accountability and, seasonal nature.
See, this is the thing that I think is so hard for, I don't know, maybe it's just me. There's good and bad in terms of the potential outcomes here. And it's easy to kind of look at this as it's all bad or it's all good. It's going to be a mixture of both. 100%. But you kind of have to really dig deep to see the positive here, because what you just said before, that's probably the first time I've considered the fact that you can actually put constraints on the monetary authority in this case, which you wouldn't have been able to do before, because there would be a whole set of convenient bureaucratic delays that would make it difficult to change those rules.
And even the fact that you can actually force the rules. One of the issues that you have with regulation and legislation is that governments can break the law. And there are certain I think during COVID here, there was some sort of, concerns that particular actions hadn't been in line with the law. The SEC has overstepped, there's been a lot of claims that they have overstepped their legislative mandate, because legislation isn't a hard boundary. It's, it's a soft boundary and you can walk over it, you can walk back. Whereas if you code something in, if you have a smart contract, it's in actually the programmable code, you can't break it unless you choose to change the code. And then if you have the right mechanisms in place for how code can be changed, that's not going to happen, right? So it's like there are different. I don't know if I'm explaining that.
No, you are. You are. And I think that to say all that, like you and I talking about that, you've got your head in this a lot clearer than I do, but most people probably don't realize that. I guess my hope would be that over time, people's knowledge of what is actually already going on around the CBDC space, my hope is that people's knowledge will increase and people will become more aware of it, because it is quite a difficult concept to get across to somebody who potentially doesn't even understand the two forms of money and how new currency is created and all that sort of stuff, because you have to start there first before you can actually explain this one. Right?
It is a challenging one though, because one of the other things that I love about the space is that we should be making things so simple for users that, everyone can use digital currencies, use digital assets without needing to know that technology that sits underneath them, like the internet, right? We use it every day. We don't understand the underlying code base. And so to have people have, I guess, that feeling of ownership and being able to have impact on how things are structured without needing to really, dig into the underlying tech, I don't know how that problem will be solved, but or if it will be solved.
Well, the more ignorant we are, the more likely the future is going to be some version of 1984.
Yeah.
But again, just focusing on the positives here, I can see so many applications where you could program the money to be even worth more for certain people and worth less for other people, right? Like it could be quite...
Line it to a social credit score?
Well, let's not go there. Well, we could go there. Like there is a lot of top-down stuff. And so, you can see why there's a lot of paranoia. I wouldn't dare call it a conspiracy theory, because you can see this stuff written in black and white, that the World Economic Forum is quite interested in this, the IMF, the UN, the BIS, very interested in this all the way down. And there seems to be a nice little bow that's trying to be tied around individual sovereign nation CBDCs before they're even unleashed. And all in good spirit, let's assume, to start with, where there's going to be a bit more cooperation between different economies. That's going to be faster. But again, it's the potential for a new type of government overreach is pretty strong. How do you see that stuff evolving?
It is really interesting that there is so much attention on it for, like you say, something that CBDCs actually aren't out there in the real world yet for most countries. Interestingly, I saw last week that Australia had done a test purchase between an Australian stablecoin and the Australian digital currency, which is called EAUD. So that's awesome to see those, tests starting to come out, but we're so far away from the stuff being mainstream still. So I think in some respects it is very good that there is the attention on how do we design these systems well from the outset. And I know, like, the IMF is looking at things around interoperability. As I talked about before, I think that open sourceness is really important. And I would say that the IMF can probably maybe step out of worried about interoperability. If everything is open source, then the market, the innovators, the fintechs will build those layer twos, they'll build those bridges. They don't need to be mandated. But, it's going to be an interesting decade, I think, to see how this stuff plays out. Like New Zealand's still quite a while away from the CBDC, I think.
Yeah. Last time we spoke, I think you were saying sometime with 10 years or so. Would you still stick to that sort of time frame?
Yeah, maybe towards the end of this decade. I think New Zealand's usually not we're not a leader. We're maybe a fast follower or a middle of the pack follower, and that's actually probably quite good, because there's going to be a lot of lessons to be learned in this space and a lot of trial and errors for other countries. France came out with a stablecoin recently, and there was a lot of criticisms over what was in the code. Although I think a lot of that was a bit of a lack of understanding from lay people as to how stable coins actually work, and sort of centrally controlled currencies like Tether, like USDC, look and feel different from a Bitcoin or Ethereum, and that's just the nature of them.
Right.
But when you see those controls put into a government-backed stablecoin, people start to get a bit concerned.
Yeah, well, I think historically we've kind of just assumed if it comes from the government, it's going to break and it's not going to be very efficient.
Or it's going to have that overreach and stuff that we've talked about. But this is one of the things that I think is good, Brian, is that you have a lot of people looking at interrogating, questioning, and trying to ensure that these things are built in a way that is fair and democratic and on the right principles. And so that gives me a lot of hope that, we won't be landing in that 1984 totalitarian society. Will be,
it'll be some form of techno-communist banksterism.
Don't even know what that means.
I don't know what that means. I just read it the other day.
Put on a t-shirt.
That's right. There we go. So you're obviously, you're here representing Easy Crypto, New Zealand's most trusted, best, most awesomest crypto on and off ramp, private business though. And then you have government interests on the other side of this. So you have a profit motivation, and then you have, say for argument's sake, control motivation. So with these two motivations at play in the innovation space and in the governing space, do you think those two forces will keep things in check and drive us towards some version of a utopian future? Or do you think that the voice of the everyday people needs to be heard a little bit more?
Has to be the voice of the everyday people. Like, when I sort of put forward a view, like, Easy Crypto submitted on the Reserve Bank's call for submissions on Central Bank Digital Currency. And, when we do that, we put in our lens of what is the future that we want to live in as individuals, as well as what is the future that our business, wants to be able to thrive. And that's, a lot of that was around, don't lock the stuff up with, with a few small incumbent players, allow that innovation to be accessed by everyone. That's us, but it's also all of our competitors. And I think that's where, the best outcome for everyday people is from open market competition.
Yeah, totally.
But that said, I think, you'll never get the best outcome if only the businesses and the corporate interests, my company included, are the ones weighing in and making their views heard. So I'm a very big fan of, the everyday investor, the everyday person getting involved in this. And I think Central Bank Digital Currencies is probably one of the defining things of our generation of how we want to shape that future.
Okay, good. Let's finish up on Bitcoin.
Love that coin.
Great.
Over 30K. It's had a good last week.
Yeah, it's amazing. And
at Bitcoin, interestingly, it had a little bit of a price bump when I got that award. So I think that might have been why.
Highly correlated.
Yeah.
Like we've speculated in the past, right? We mistakenly thought that it was because it was highly correlated to the NASDAQ.
Yeah. Well, the ETF fund announcements, so who knows?
It's huge. It always has been. Okay. So, but yeah, what are your general thoughts? Like in the future, when we have this CBDC completely running and everything's in that space, do you feel like Bitcoin will be more or less valuable?
It's a good question. I mean, I'm long-term bullish on decentralized cryptocurrencies. I always have been, so I'm probably a bit skewed in this. But I think one of the things that I think will be interesting with CBDCs is that it will probably reduce the hegemony of the US dollar a lot. Like you'll have, you're already seeing countries outside the US, so like the BRIC countries, doing international trade settlements without using US dollars. And this is quite a recent change. There's obviously a lot of political reasons behind that, but you're seeing the US no longer be the reserve currency for the world. And crypto, though, US dollar is absolutely the reserve currency. Like it's USDT, USDC, every trade's in and out of those. So we're not yet at a place where Bitcoin is stable or valued enough to act as a reserve. We might never get there, but I think it's always going to have a some sort of potential as a hedge, as a alternative store of value. We talk about it as being the gold, the gold in the crypto network. And I think in my mind, it's always going to retain that place because it's got the trust, the mana, the longevity, but also Bitcoin as a network is incredibly simple. Like it's old and slow and clunky and kind of traditional. It's conservative. It doesn't change. Contrasting that to Ethereum, which is amazingly innovative. And, the Ethereum network is sort of bounding, leaps and bounds ahead and create all of these cool, innovative things. But there is value in having that old, traditional, conservative, doesn't change currency that it's decentralized, it's, proof of work for all its flaws, does have some really good decentralized capabilities to it. And I think Bitcoin will always have value because of that.
Okay. So you wouldn't consider yourself a Bitcoin maxi, clearly.
Oh, no, I'm a nothing maxi. I am like...
Nice and safe answer. There you go.
No, but I mean, this is one of the things that surprises me all the time about the crypto industry is how philosophically wedded people are to different things. Whereas I'm like, I look at things and I can see the pros and cons of the different things. Like, I love Ethereum for all sorts of reasons. I love Bitcoin for all sorts of reasons. I love Matic. I'm interested in seeing how Solana is developing in different areas. Like, I even think Cardano has some really interesting points, which, people might slaughter me for, but it's like, none of these things are the one true thing. It's not like, this is cryptocurrency. It's not a religion, but too many people sort of have that there is only one mindset, and yeah, not me.
Yeah. Oh, fair enough. Well, you don't have to be a vegetarian to try a salad, right? That's what you're saying.
Absolutely.
Cool. Okay, awesome. Well, thank you very much, Janine. This is a great chat, as always. And until the next time, thank you very much.
Thanks, Darcy.
Cheers.
Techno-Communism.